As we're approaching the end of the year, I have 10 tax tips for you guys before the end of the year. So we're gonna get into it in just a second, and these are not listed in any particular order, but they're all really important, so make sure you stay through to the end. Before we do that though, I wanna say hello, I'm back. I had about a 2-month break on YouTube videos, and I appreciate for all of you guys who have been sticking with me during this time, still watching videos, catching up on old ones, checking out the shorts. I appreciate it, but I am rested, I am revived, I have new energy for videos, and I've also been thinking a lot about strategy. I've been taking feedback of what you guys have given me, and I am looking forward to more changes in the channel coming forward. So I am really excited to be back. I am looking forward to sharing this information with you guys today. And the end of the year is a big time for us finance folks. We just kind of came out of budgeting season, as I like to say with clients, and now we're looking into, what else do we need to do for the end of the year? And right now there's a lot of tax preparation and not actually preparing the tax returns, but preparing for taxes and some of the tax deadlines and tax considerations that we have when we're approaching the end of the year. So all that to say, thank you. I hope you're subscribed to the channel. I've got a lot of good stuff coming up in the next year, and really excited to take all the feedback and just implement it here and help continue supporting small business owners, because that's what I am here to do. So make sure you are subscribed and make sure you like this video as always. It helps out the channel, it helps out this video, and I appreciate it very much. So with that, let's get into these 10 tax tips. The very first one is to be aware of tax deadlines. So most of us are on a calendar fiscal year, so that means that December 31st is going to be a very important time. This is what we call a cutoff period. This period, you need to be really clear that once that date is passed, it's over. The year's over. So you can't start spending money in January and think, oh, I'll just date it I'll predate it. I'll date it for December 31st and get it into the calendar year of the previous year. No. If you are going to try to be making expenses or making purchases or even receiving money or trying to receive money into the next fiscal year, you need to make sure that you're very aware of this date. So if you really don't want to get a big check from a client until the next year, because you're going to have a big tax implication, then don't invoice them until after the end of the year, or make sure that customer is not going to pay you before the end of the year, because if you receive payment, you need to record it. This is, if you were to get audited by the IRS, they always look at a cutoff period and they want to see, are you manipulating your earnings or are you manipulating your profit and pushing profit into the next year or pushing revenue into the next year, or are you pushing expenses into a year? That's not the case. So you need to be really clear about that cutoff date. Another date I want you guys to be aware of is your estimated tax payment date for Q4. So this is your final tax year payment. So you'll make your final estimated tax payment. And we do have a video about estimated taxes. I will put it above here somewhere. The final date where you can, make those prepayments is usually January 15th, but if that falls on a weekend, they'll push it back a day or two. So that actually falls, I believe, on a Sunday. So this year it's for 2023. The Q4 payment for 2022 is due January 16th. You can always Google that. So if you're watching this in a different year, you can always Google it and just confirm exactly what that date is. But that's your final option or your final opportunity to make a estimated tax payment for the tax year of 2022. So that's very, very important to pay attention to. The next thing you want to pay attention to is that tax forms for your employees and your contractors are going to be due. You need to report all your W-2 information and give those to your employees. It gets reported on W-3, but all of that needs to be reported and filed by January 31st. And then your 1099 NEC, which is for those contractors that you're hiring. NEC stands for non-employee compensation. So if you are sending out those 1099s for those non-employees, those also need to be filed by January 31st. Now, 1099 MISC, which is your miscellaneous 1099s. They split that form a couple years ago. That 1099 miscellaneous form, that is still due February 28th. Okay, so you guys, these tax deadlines are really important. Mark them on your calendar. You're going to need to know about them. And then this gets into our second tax tip, and that is know who is doing this stuff for you. If you are at a situation where you might have a payroll provider, or if you have a CPA or a bookkeeper doing your payroll, you need to ask who is filing the W-2s and who is filing the 1099s. You might have some obligation on some of this if you are not aware. So you need to know who's got your back, who is filing these things for you. If payroll is on your plate, then likely these payroll deadlines are also going to be on your plate. And you might also have a provider that might have another deadline before that. So they might say, hey, you need to review all this stuff by December 31st so that we can file W-2s by this date. So I know a lot of payroll providers will actually give you a year-end checklist. So make sure you are doing your part. Even if somebody else is doing the filing, you might still have a review portion to do to be able to get all of this stuff done. Okay? My next tip for you is that you need to understand your basis of accounting, both from how your financials are being done and how you are reporting on your taxes. Okay, so when I mean basis of accounting, you've probably heard of cash and accrual. Are we doing cash books? Are we doing accrual books? So if you are doing cash basis books, which most small business owners are, you need to make sure that that's also how you have said you're reporting your taxes, which is how most businesses are. Once you get to a certain size, you need to start reporting your taxes on an accrual basis, but maybe you elected early to run your financials on an accrual basis, and then you also want to, be doing your taxes that way, so maybe you line that up. Just be really clear on whether it's cash or accrual, because some of the tax saving ideas will not help you. Let's say if you're accrual basis and you want to prepay rent for a full year thinking, I'm going to get my tax liability down because I'm going to prepay my rent for next year. You might run into some problems because you actually can't do that if you're on accrual basis for tax purposes. So you might be thinking you're doing this great thing for your business, but when it really comes down to it, all you've done is put a prepaid expense on your balance sheet. So make sure you're really clear with that. Talk to your CPA or talk to your bookkeeper and make sure you understand so that you're not taking a strategy that's really not going to help you at the end of the day. Okay, tip number 4. This one I get really passionate about, so bear with me. Do not succumb to all of the temptations at the end of the year to save on taxes and, buy this because it's a write-off. Just don't do it. Don't do it. There are temptations left and right. Temptations, not like people are trying to be evil or whatever, but they're just might be saying, hey, go ahead and spend your money now at the end of the year. And that is not necessarily a bad thing. But what I want to say is only spend money on things that you would be buying anyway, regardless of the timeline. So for a great example is like if you're using a software, let's say I use Slack for my internal team. So if I know I'm going to be using Slack for all of 2023, then it might make sense for me to go ahead and pay an annual payment for Slack, especially if I can get a little bit of a discount, and I can do that before the end of the year. I'm a cash basis filer, so it's not a prepaid expense in my mind. It's a cash expense, so it's going to reduce my profit, and I have the cash to do that. So these considerations, if I know I'm going to use it, I have the cash, and it's going to affect my profitability, then I can do it. But what I don't want you guys doing is saying, okay, my profit is a little high. I'm going to go and buy, something just to get the profit number down. But if you wouldn't have bought that thing anyway, then it really doesn't make any sense. So it's like spending $1 to save a quarter. It doesn't make any sense. Then you've just wasted 75 cents. So I would rather you guys have a higher profit, pay the taxes on it, but just stay efficient with what your expenses are, because you don't need to be buying just crap that you don't need in your business just to reduce your tax liability. Okay. So this is one of those things that people get, it's like they don't think about it until they do. And then they go, oh, that doesn't make it. Yeah, of course I wouldn't do that. So there gets this year-end hype that happens. And then, sometimes logic just goes out the window. The next thing, I kind of alluded to it previously. Number 5 is make sure if you are taking action and spending money that it affects your profit. I'm going to give give you guys a couple examples. Sometimes people think, well, I'll just take a draw at the end of the year so that it will reduce my profit, and then I won't, have this big liability sitting on the books. A owner's draw is actually a balance sheet transaction, and it never touches your P&L. And your P&L is what's driving your taxable income. So you need to understand if it's actually what you're doing is going to have a P&L effect. And you can talk this over with your bookkeeper or your CPA. Say, hey, I was thinking about spending money on these things. Does this make sense? Will this actually reduce my taxes? Another thing that people do is they might buy a piece of equipment that they need, or they might buy some type of asset. And it is possible that if you buy an asset, you can put as a balance sheet transaction. So your balance sheet, the cash goes away and you create an asset on your balance sheet. But there are some situations where you can accelerate depreciation and you can put depreciation expense on your P&L. So that could potentially decrease your taxable income, but you need to talk to your CPA about that. Be really clear about what you're spending money on, and that will help you figure out, do I do this or do I do that? The next thing that you need to pay attention to is that you need cash in order to do some of these things, and some of these tax saving strategies end up being that you need cash. So if you are in a situation where you don't have a lot of cash, probably your best situation is to just save your cash for your tax liability and hold on to it, knowing you're going to have your tax liability. Don't be paying out all of your cash for these tax saving strategies, because again, it goes back into you're spending $1 to save 25 cents, even if it's stuff you really needed, but that means that you have 75 cents less to do stuff with. So make sure that you're keeping an eye on your cash balance. Some of this stuff will just be off the table. You might be told to accelerate, put some money into a retirement account or something. But if you really don't have the cash to put into the retirement account, then it's not an option for you. So make sure you're always keeping an eye on the cash. 7th tip for you is that you need to forecast through the end of the year. So I highly recommend everybody has monthly financial statements that are being done in their business so that you can see. So I'm recording this at the end of November. By the time this posts, it'll be December. But early in December, you need to have your November books done. And then you need to have a good estimated guess on what you think December is going to look like. So if you have no idea, take either last year's December numbers and plug them in and say, okay, revenue was this, or even just put your profit number down at the bottom, or take maybe an average of profits from the whole year before, or think to yourself, December is, a good month for me. It's going to be really similar to November. So maybe you can just take the November number and project it out into December. The idea here is that you want to get an idea of what that year-to-date number could be, and you want to use an educated guess to get you there. Okay. Now, forecasts are essentially an educated guess of the future, based on past historicals, based on, what we know about the business. So you can decide, which month looks the most like what I think December is going to be like in my business, and then try to project the profit for that. And then you'll have a year-to-date number, so you can have an idea of what is my tax liability going to be? Do I have a profit of $500,000 and maybe I have no savings in the bank? That might become a problem if you haven't made any estimated tax payments. Or maybe what you find is that it's actually a break-even year and you don't even have a tax liability because the business was at, 0 or maybe a slight loss. So, don't freak out and, take actions until you kind of have a good estimate of what the whole year is going to look like. Tip number 8 is that it doesn't hurt to set up a meeting with your CPA to talk about some tax planning strategies. So this is a prime time to be doing some tax planning. And especially if you forecasted and you do see that you're going to have a fairly high liability, I do think it's worthwhile to go ahead and meet with a CPA. If you can't meet with your CPA for some reason before the end of this year, just make sure you get into your plan for next year that you do want to find somebody who can do tax planning with you. And, keep in mind that, if your liability is really small, you probably don't want to spend a lot of money on tax planning. If you have a really big tax liability, you might want to, just make sure, touch base with your CPA and see if there's anything that you're doing that can tweak things and make your taxes a little bit more efficient and hopefully get your effective rate down a little bit further. Okay. But a tax planning, what I want you to know when you go into that tax planning meeting is be your own advocate. The CPA should be thinking about you and your business and your whole financial picture. So a good CPA is going to think about it holistically, and they're not just going to give you blanket, here, buy a car, do this, do that, like that are very standard suggestions that might not have you in mind. So make sure that the advice feels tailored to you. Okay. And because they need to ask you like, well, how much, cash do we have to play with? Like, what are your long-term goals? Like they might ask you, like, are there any equipment purchases you were hoping to make? Or are there any, softwares that you really like to use that maybe we can pay ahead of time? They should be having this conversation with you. And if they are not, find a different CPA. And I'm going to be harsh on my own kind. I am a CPA. I don't do tax returns, and I don't do tax planning, but I know what it feels like to be in a conversation with a CPA who actually is helping the business move forward. And then the ones who are just, spitting out the same advice that they're giving to everybody. And I've had clients come in that get really poor advice from CPAs that were not taking their needs really into consideration. And then they're stuck with tax strategies that actually don't make any sense. Okay. So don't just blindly take a CPA's advice. Think about it. Does it make sense for you? And then find an advocate, find a CPA that's actually going to be a true advisor to you if you're looking for tax planning services. I do have a video that explains the difference between like CPAs, bookkeepers, and EAs and stuff. And so I'll try to put that in the cards above so you can check that out. If you're just really like, oh, I thought my bookkeeper could help me with these things. I kind of separate out what those different roles look like in the organization. Okay. Tip number 9. Don't put all your effort into trying to reduce your profit to zero so that your tax liability is zero. It's not a good strategy. You don't want to make $0 over and over and over again in your business. Why? Because would you ever like to maybe sell your business? Would you like to ever maybe buy a house? Would you like to get a loan? Would you ever like to show someone that your business is actually making profit because there's value being created in your business? Chances are you probably do. So if you are showing zero tax liability over and over and over and over again, what that tells somebody is that your business is making no money. And, yes, maybe you avoided taxes, but you're also making no money, and inherently there's not going to be any value in your business because of that. So let's make sure you're balancing the idea of lowering your profit with also the fact that you could also be lowering the inherent perceived value of your business. Greg Crabtree, the guy who wrote the Simple Numbers book, he says that how much taxes you're paying is actually a KPI because he wants you to pay a lot of taxes because that means you're making a lot of money and your profit's high. I would rather have a huge profit and pay 40% taxes on it than no profit and not pay any taxes. I think you probably would too. So the last tip I have is just to stay aware and be logical. If you are feeling like there's a frenzy, take a step back. If you're feeling like something feels like it's too good to be true, probably is, take a step back. Be logical about any step that you take and make sure you understand what you're doing. Have somebody walk you through if you don't understand, like, okay, I'm supposed to be putting this money into this account, or I'm supposed to be investing over here, or I need to buy this. Make sure you understand what the implications are going to be and understand, is it going to reduce your tax liability? And is that something that you even want? Is it going to take you into a loss position? Maybe you don't want to do that. So just make sure you're staying really aware and that you are understanding the actions you're taking as the business owner. The last thing I want to say is that if you need help on estimated taxes, I do have a video for that, and we will link it in the cards. All right, bye everybody.